Colliers U.S. CEO Gil Borak. Colliers is one of the largest global diversified real estate services firms. Gil, good to have you. You know, when it comes to the capital markets right now, and/or as well the banking industry, what are you seeing in terms of a willingness to step up with new loans or refinancing of existing loans for commercial properties?
Yeah, good morning. Look, right now, I think we're at a point where there's an imbalance between buyers and sellers. And that imbalance, of course, is caused by the fact that interest rates have gone up so precipitously. So we really have mostly a holding pattern, very difficult to raise capital right now. But I think that as we've seen in past cycles, that stands ready to dissipate, I think, in fairly short order.
What breaks the logjam? Lower prices?
I think actually, if the Fed is done raising interest rates, which seems like it could be, that seems to what they signaled, we could get price discovery. At least we would know what the cost of capital is, what the cost of debt is. Buyers and sellers would then reach equilibrium, in fairly short order after that. So I think we've got to wait for the next Fed move or lack thereof.
What about the bank failures on top of that? Have you seen a notable difference since that's happened as far as access to credit?
It's a bit of a catch-22. Certainly that causes tighter credit, across the economy broadly, and of course in commercial real estate as well. On the other hand, that tighter credit does some of the work that the Fed might otherwise have had to do in terms of normalizing pricing. So it hasn't been precipitous. It hasn't been pervasive. But of course, there's been an impact from the regional bank failures.
Well, what are your expectations when it comes to price? I mean, you do have some buildings out there that are far from fully occupied, many, in fact. And if they're not A buildings, it doesn't seem like there's a lot of demand or a great future for them. What's going to happen?
I think there's always a price. And the question is, at what price is a seller willing to sell and or invest to convert buildings that can be converted, which I think it's broadly known. And it's coming to light that not all of them can be. But where you have Class A buildings with good amenities, new buildings, it seems to be that there's high demand and that rents are going to be quite stable and maybe even rising for the best buildings. So it is going to be a tale of two cities in terms of the class of assets.
How does that impact you and your product portfolio in terms of exposures and where the bright spots are and where you are investing right now, if anywhere, in CRE?
Yeah, thankfully, our main business that I run is really a brokering of buildings and brokering of facilities. And we've got a very diversified platform, including industrial, retail, multifamily. Office is one component. And of course, we do leasing, management, and valuations as well. So like is always the case, the more diversified you are, the more protected you are. But that's not to say that we're not feeling the fact that capital markets right now is in a doldrum.
Gil, appreciate your time. Thank you.
Thank you for having me.